July is almost over, and we have some great stats for you today. Some really good things for both marketing as a realtor, as a builder, a mortgage person, even. And if you're a consumer, it's even just good info to know. So let's get into this real quick. Let's start sharing the screen. Can you believe July is almost over? That is wild to me. But here we go. So, with all that said, team, it is not good. Rates moving up 6.77. And you'll see here that I put little Homer Simpson up in the upper right, showing him get kicked in the sensitive parts. Because look at what's happened. Green is bad, guys. This is the 10-year Treasury. The screen before showed rates around 6.77. This shows the 10-year Treasury around 4.7. So usually, in the last few years, mortgage rates have been about 2 points higher than the 10-year Treasury. That hasn't been in this case historically, but that's just how it's been lately. So, housing, I don't know why the little picture's not showing up, but ultimately there's a big bill passed. I don't think it's going to do anything. Supposedly it's going to make it easier for like builders and people to buy land and build and make things more affordable. I'll believe it when I see it. It's still the government. Oh, there's my picture. Hope for housing. I got to be honest. We'll see. I'm not expecting any monumental steps on this thing. I did see this and thought it was very interesting. Dallas is number 12 nationwide as far as millennials. So you guys can see the top 10 listed, San Antonio and Austin making the list. San Antonio number 10, Austin number 7, which is really interesting. Austin's typically way more expensive. So for a lot of millennials going there, maybe it's the tech boom with Elon being down there, who knows? But Dallas is number 12. You guys can see the map. Seattle number 1. Kudos to you, my man who's listening in Seattle. Congratulations on your city being the number 1 for millennials in the past 5 years. But look at these stats, guys. 47% of local millennials own homes. Um, they've doubled millennials, especially in Dallas, since 2018 as far as homeowners, which is crazy to me. That's amazing. But here's another thing. I'm a Gen Xer. Let's not sleep on Gen X, guys. You guys look at the graph on the right, and it says buyers and sellers by generation. The number of buyers, I mean, look, I get you say older boomers and boomers, you put them together, and I understand that's a big, what is that, almost 50%, right, of the category. But the reality is 25% is Gen Xers, and it makes sense, right? They have more money, and with affordability, ages 46 to 60, it's a quarter of the market. So as much as we want to talk about millennials, millennials are the same size as the Gen Xers, and the Gen Xers typically are going to be buying bigger homes. So I thought that was really interesting. Thought I'd share that. And then also for Texas, we are number 2 nationwide, and this is for relocation. I didn't make that very clear in this slide, but this is relocation. Leander, Texas, which is down in the central Texas, Austin area, number 9 nationally. But as far as like relos, basically the point of this thing was to say is that now, which makes sense, you can see populations are going outside the major cities like the Austins of the world or Dallas of the world, and they're going to the outskirts where things are more affordable. Again, nothing earth shattering there, but it's a good little article that just talked about how, again, Texas is number 2 and number and nationwide is in Leander, which is crazy to me because I've never been there. I know where it is on the map. Buyers and sellers. So if you got buyers around the fence saying, man, I just don't want to, check this out. That blue line on the right shows the number of buyers, and we are at a low. We have been for the last 2 years with 1.4 million buyers, but yet the sellers 1.9. Look at that gap. And the gap is what's important because the gap shows you just supply and demand. You can look in the past, let's say all the way back to 2013. 2013 is equilibrium. Looks like things were going pretty good back then, right? You had 2.4 million sellers, 2.4 million buyers. You get a gap, and all of a sudden becomes a buyer's market when that big gap happens. And during COVID, became a seller's market because just people were competing. Right now, this is the part I would just tell your buyers and sellers, like buyers, this is a great opportunity to go out and get you some. All right, go get you some. Go buy a house because with this data, it just shows that there are so many more sellers at this moment. Now, again, you can see as in history, these gaps close and they becomes more equilibrium. So when it's at parity, it's neither a buyer or seller's market. Now it's the buyer side. So I just would drive that home. Yes, rates have gone up. Bombs are flying, oil's going up. I get that. But that's what makes this a buyer's market is that the interest rates aren't bringing out people from the woodworks, but you can always refinance. And if rates never go down, that means you're buying the best rate you're going to see in the future. So you can argue both sides. And then this is the other part, kind of just, part 2 that what I just showed you. And the part I just wanted to point out was on the right, the new listings now versus, 2025. You can see the red in there. Yeah, we're up a little year over year, but ultimately it's not like it's any worse than it was last year. And we've seen years with more listings, right? This shows the average, the very top line, the 2017 to 2019. That was the average of those 2 years. And you can see each year in between. My point is, we've seen better, we've seen worse. At this point, I got a lot of folks internally here in our branch, in our area, in our region that are having the best years ever. And it's just because activity breeds activity. They're out there doing what it takes. And so it is a great time to buy. It is a buyer's market. The median list price has fallen. And I think I got a slide on that about list prices coming down here in just a second. But closing costs, this is real. We started with a government slide. We're going to end with, not end with it, but show it here. Closing costs have gotten cheaper on refinances. They're piloting them. This is Bill Pulte, and he kind of led the charge on this. They've made it to where hopefully, I haven't seen any or done any yet because rates aren't cooperating. Finances can happen now with much lower costs, as much as $1,500 in savings. And in Texas, that's a big deal because our title policies are so expensive. So again, that is a thing that is at least out there, and we're trying it as we speak. And then as far as the fun, the soccer, the meme, me, I don't cup. It's a big tournament, and then also me watching 104 matches. I'll be honest, I didn't watch 104. I did watch a number of them. I do miss that it's not on TV. I saw a meme told me about this that Americans are confused by what offsides is, and the answer is when something exciting happens in soccer, that's offsides. I thought that was a good joke. And then lastly, just FIFA. My buddies do tell me the ones that do like soccer, it's rigged and they get rich. So here's the numbers: $13 billion of income, and then broadcasters. They generated them an extra 4 billion. Tickets and all that stuff was 3 billion. I mean, it's just big numbers for soccer. So good for FIFA, I guess, if you want to say that. And it was certainly an awesome thing to have. All right, search. This is incredible to me. And I know I'm a nerd. Google has supposedly increased its search revenue by 17%. So, in the beginning, it was like, oh, AI is going to replace Google search. We don't need it. Google found a way, and they made it to where now, yes, they got AI built into their piece, but their search revenue is up, which is crazy. So it is interesting. If you're a Google stockholder, good for you, and you should be, I think, long term. Product of the week, AIO, all in one. This is phenomenal for the self-employed, for the cash flow, for the investors. This is a phenomenal product. It works similar to a line of credit. It's where you can tap into your equity when you need it. It is awesome. It pays off significantly faster than a traditional 30-year fixed. So if you know somebody that just is looking for cash flow options, this is a phenomenal product for them. And I laughed out loud when I saw this. The meme of the week, when a buyer calls a realtor and they want to see a house as soon as possible, but today was your self-care day. Edward Scissorhands. That's awesome. And then lastly, really appreciate it, Maritza and Justin killed it. They got my name's in there too, but the reality is I know they did the dirty work. So thank you for our clients for always recommending us. And as always, you should know what to do, right? Subscribe, all that fun stuff. And most importantly, when you think mortgages, think Mark.